Hey everyone, welcome back to Corporate Decoded, the place where we break down the complex world of corporate finance. And today we are diving deep into a massive filing from Nuveen Managed Accounts Portfolios Trust. Now, this report is packed with details about how different portfolios performed over the last year, including some really interesting numbers about their holdings and how they are doing financially. But before we get into the nitty-gritty, if you appreciate getting straight insights from corporate documents in simple terms, make sure you're subscribed and hit that notification bell. We also have a fantastic Discord community linked in the description below where we discuss these filings and much more, so come join the conversation. Alright, let's begin. Nuveen Managed Accounts Portfolios Trust is a big player in the investment world, and this document is essentially their annual report for the 31st of July 2025. It gives us a look under the hood at several of their managed portfolios: their municipal total return portfolio core, impact bond portfolio, emerging markets debt, high yield preferred securities, and income securitized credit, and ultra short municipal portfolios. This is where we get to see how these funds have been performing what they invested in and what it all means for investors. First up is the Municipal Total Return Managed Accounts portfolio. For the year ending the 31st of July 2025, this fund returned negative 0.69%. Now that might sound a bit bad, but it underperformed its benchmark, the Bloomberg 7-year Municipal Bond Index, which returned a positive 3.45%. The report mentions that longer maturity and longer duration positioning compared to the index and an overweight to BB-rated bonds were top detractors from performance. So basically they were holding on to bonds that were sensitive to interest rate changes for longer than their benchmark, and they had more lower quality bonds, which is a bit riskier. Looking at their fund performance over the last decade, the Municipal Total Return portfolio returned an average of 2.39% annually over 10 years. That is not too shabby, but it is actually a little bit better than the Bloomberg Municipal Bond Index, which returned 2.11% annually. It is interesting because in the short term they underperformed their benchmark, but over the long haul they did a bit better. Their total fund assets as of the 31st of July 2025 were a massive $1.5 billion. Next, let's check out the Nuveen Core Impact Bond Managed Accounts portfolio. This one did much better, returning 4.60% for the year and outperforming its benchmark, the Bloomberg US Aggregate Bond Index, which returned 3.38%. They contributed the success to overweights in corporate bonds, commercial mortgage-backed securities and government-related credit, and underweights in US Treasury bonds and mortgage-backed securities. This means they bet more on corporate debt, which usually offers higher yields than government bonds, and they were lighter on the safer government bonds. Their fund net assets were about $19 million. Now, for something a bit more globally focused, the Nuveen Emerging Markets Debt Managed Accounts portfolio returned 7.14% for the year ending the 31st of July 2025. However, it did underperform the JP Morgan MB Global Diversified Index, which returned 9.32%. The report points to an underweight to high-yield bonds and a lack of exposure to distressed sovereign issuers as detractors, so they avoided some riskier assets that ended up performing well during this period. Their fund net assets were around $27.9 million. Let's shift gears to the Nuveen High Yield Managed Accounts portfolio. This fund returned a solid 8.53%, outperforming its benchmark, the ICE BOFA BB BUS Cash Pay High Yield Constrained Index, which returned 7.56%. They did well with security selection in telecommunications and retail industries, and also in BB-rated bonds, which is a bit more on the risky side. Their fund net assets were about $17.8 million. Moving on to the Nuveen Preferred Securities and Income Managed Accounts portfolio. This fund returned 9.90%, outperforming its blended benchmark by a good margin. The benchmark consisted of about 60% ICE US Institutional Capital Securities Index and 40% ICE USD Contingent Capital Index. They attributed their success to security selection in the banking and insurance industries, which is pretty interesting. Their total fund net assets were around $18 million. Now let's look at the Nuveen Securitized Credit Managed Accounts portfolio. This fund returned 5.15%, outperforming the Bloomberg US Securitized Index, which returned 3.45%. Their mortgage allocation, including residential mortgage-backed securities and an out-of-benchmark allocation to mortgage credit risk. Transfer securities were key contributors. They also had an overweight to commercial mortgage-backed securities. Their fund net assets were about $43.2 million. Finally, we have the Nuveen Ultra Short Municipal Managed Accounts portfolio. This fund returned 2.71%, but underperformed the SIFMA Municipal Swap Index, which returned 3.38%. The report mentioned shorter duration positioning with more daily than weekly puttable securities and an overweight to AAA and AA rated categories. As performance drivers, basically they were playing it safe with very short term and high quality bonds to minimize risk. Their fund net assets were exactly $10 million. Now let's talk about costs. For a hypothetical $10,000 investment, the municipal total return fund cost, investors only $1, which is 0.01%. Most of the other funds like the core impact bond emerging markets, debt high yield securitized credit, and ultra short municipal portfolios cost investors absolutely nothing, $0 and 0%. This is because their investment advisor and sub-advisor are compensated from fees charged at a separately managed account level, which is a pretty neat structure. The preferred securities and income fund cost $1 or 0.01%, which is also incredibly low. This really highlights the impact of their fee structure. Where the funds themselves don't directly pay management fees, it is all handled differently. When we look at what the funds invested in, remember these numbers are as of the 31st of July 2025. For the Municipal Total Return Fund, they had a massive portfolio of over $1.4 billion in municipal bonds. Colorado was their largest state, holding at 8.3% of the portfolio. For the Core Impact Bond Fund, their portfolio was much smaller at about $18.9 million, and they invested heavily in what are called corporate bonds at 44.2% of their holdings. Then for the Emerging Markets Debt Fund, their portfolio was about $27.9 million with a heavy focus on sovereign debt at 49.6% and corporate bonds at 46.6%. The High Yield Fund with about $17.8 million in net assets was primarily invested in corporate bonds at 96.6%. The Preferred Securities and Income Fund with roughly $18 million in net assets was also heavily invested in corporate bonds at 97.6%. Lastly, the Securitized Credit Fund with about $43.2 million in net assets had a huge chunk, over 80%, in mortgage-backed securities. The auditors PricewaterhouseCoopers LLP, who have been auditing investment companies in Nuveen funds since 2002, gave a clean opinion saying the financial statements present fairly in all material respects. For the Municipal Total Return Fund, they audited statements for the year ended the 31st of July 2025. For the Core Impact Bond, they audited statements for the year ended the 31st of July 2025. And for the Emerging Markets Debt and High Yield Funds, they audited statements for the year ended the 31st of July 2025 and the period from the 1st of November 2022 to the 31st of July 2023. The Preferred Securities and Income Securitized Credit and Ultra Short Municipal Funds also had their statements audited for the year ended the 31st of July 2025. When it comes to fees paid to their independent auditor PricewaterhouseCoopers LLP for the year ending the 31st of July 2025, the registrant paid $382,476 for audit fees and only $28 for tax fees. For the year before the 31st of July 2024, they paid $389,565 for audit fees and $29 for tax fees. It is interesting to note that the audit-related fees and tax fees billed to the advisor and affiliated fund service providers were zero for both years. This suggests the auditor S-Work was primarily focused directly on the registrant itself. The total non-audit fees billed to the advisor and affiliated fund service providers for things related to the registrant, S-operations and financial reporting were zero for both 2025 and 2024. However, the total non-audit fees billed to the advisor and affiliated fund service providers for all other engagements was a whopping $11 million in 2025. This is a huge number and implies significant consulting or other non-audit services were provided to the broader Nuveen organization. Now let's get into the meat of the filing, the portfolio of investments as of the 31st of July 2025. The Municipal Total Return portfolio is massive, holding nearly $1.5 billion in municipal bonds. Colorado alone represents 8.3% of their investments. They hold a lot of bonds from various water and wastewater authorities and school districts across the US. For the Core Impact Bond Fund, their corporate bonds are a big part of their holdings at 44.2%, with a significant portion in utilities and financial services. In the Emerging Markets Debt portfolio, sovereign debt is king at 49.6%, and Mexico is their largest country, holding at 11.1%. For the High Yield Fund, corporate bonds make up the bulk of their investments at 96.6%, with a significant chunk in energy and media entertainment. The preferred securities and income fund is almost entirely in corporate bonds at 97.6%, with a huge portion in banks at 49.1%. The securitized credit fund is heavily invested in mortgage-backed securities at 80.4%, which makes sense given its name. Finally, the ultra-short municipal fund is focused on short-term municipal bonds at 96.6% of its portfolio. Looking at the statement of operations for the year ended the 31st of July 2025, the municipal total return fund had net investment income of over $67 million. However, they also had significant net realized and unrealized losses, totaling over $77 million. This means they actually had a net decrease in net assets from operations of over $10 million. The core impact bond and emerging markets debt funds both saw net increases in net assets from operations, while the high yield and preferred securities and income funds also showed net increases in net assets. The securitized credit fund had a net increase of over $1.9 million, and the ultra-short municipal fund had a net increase of just over $270,000. As of the 31st of July 2025, the Municipal Total Return Fund had net assets of over $1.5 billion. Core Impact Bond had about $19 million. Emerging Markets Debt had almost $27.9 million. High Yield had close to $17.8 million. Preferred Securities and Income had about $18 million. Securitized credit had over $43 million, and ultra-short municipal had exactly $10 million. It is clear from these numbers that the Municipal Total Return Fund is by far the largest and most significant of these portfolios. For tax purposes, it looks like the Emerging Markets Debt Fund had about $264,077 in net long-term capital gains. The High Yield Fund had around $282,137 in net long-term capital gains. And the Preferred Securities and Income Fund had over $331,939 in net long-term capital gains. For the other funds, these amounts were zero. Also for core impact bond and preferred securities and income funds, there are percentages listed for ordinary income distributions eligible for the dividends received deduction and qualified dividend income, which are important for corporate and individual shareholders respectively. The Board of Trustees of Nuveen Managed Accounts Portfolios Trust met to review and approve the investment management and sub-advisory agreements for the funds. They considered factors like the nature, extent, and quality of services provided, the investment performance of the fund's fee, and expense structures, and any indirect benefits received by the advisors. For the Municipal Total Return Fund, they noted that while performance was below its benchmark for longer periods, it outperformed for the 1-year period, and they felt the advisory agreements should be renewed. Similar assessments were made for the other funds, taking into account their specific benchmarks, performance history, and any unique fund structures. Notably, for several of the newer funds like emerging markets, debt, high yield, preferred securities, and income securitized credit, and ultra-short municipal, the board considered their performance history too short for a definitive assessment, but still approved the renewals. It is quite remarkable that for most of these funds, the advisor pays or reimburses almost all the expenses, excluding things like interest taxes and extraordinary items. This means the funds themselves have virtually no direct management fees, which is certainly a win for investors. The advisor and sub-advisor are compensated through fees charged at the separately managed account level. This is a pretty unique client-friendly fee structure. Now, looking at this filing as a whole, Nuveen seems to be running these funds quite efficiently, especially when it comes to fees. The fact that most of these funds have zero direct expenses for investors is a huge positive. However, the performance really varies. Some funds like the Core Impact Bond and High Yield funds seem to be doing well, outperforming their benchmarks. Others like the Municipal Total Return and Emerging Markets Debt funds are lagging behind. The report highlights an interesting strategy where some funds are avoiding distressed sovereign debt and focusing more on corporate or preferred securities, which can be riskier but potentially offer higher returns. The large amount of non-audit fees billed to the advisor in 2025, around $11 million, is something to keep an eye on. While it doesn't directly impact the funds, it suggests significant consulting or other non-audit services are being provided, which could be a sign of the firm's broader business activities. Overall, Nuveen appears to be managing these funds with a low cost structure, but investors need to pay close attention to the performance of each individual fund as it varies significantly. The strong emphasis on separately managed accounts also means that direct fund level fees are minimal, but the overall cost of managing assets within those separate accounts will ultimately impact the investor. So what is your take on these Nuveen funds? Were you surprised by any of the numbers or the fee structure? Let us know your thoughts in the comments below. If you found this breakdown useful, please hit that like button and subscribe for more. And don't forget to join our Discord community linked in the description to keep the conversation going. Thanks for watching, and I'll see you in the next one.